You know, something really big is happening in the world of DeFi right now. There's this massive shift away from just pure hype, and projects are starting to get serious about how they design their token economies for real, actual long-term value. So let's dive right in.
So let's start with a question that I'm sure has kept a lot of you up at night. Why is it that so many of these DeFi tokens, even the promising ones, just seem to lose value over time? You see the launch, you get excited, and then the chart just kind of goes down and to the right. Well, it almost always comes back to one absolutely critical concept.
And that concept is, of course, tokenomics. You can think of it as the economic blueprint for any crypto token. It sets all the rules of the game. How many tokens are there? Who gets them? And, most importantly, what are the incentives that actually make people want to hold it? If you get this blueprint wrong, you're gonna have a bad time.
And historically, the problem has really been a one-two punch. First, you've got these flawed economic models that just don't create any lasting demand. And second, you have this massive, constant selling pressure from early investors and even the team itself as their tokens unlock. It's been a recipe for disaster for so many projects. But things are finally starting to change.
A whole new philosophy is starting to take hold, and honestly, it's a really powerful way to think about it. The smartest teams out there aren't just launching a token anymore, they're trying to build what you might call a DeFi nation.
And this quote just hits the nail on the head. It perfectly captures this new way of thinking. A token isn't just some speculative chip you trade back and forth. No, it's the national currency of a digital economy. And just like a real country can't just print its way to prosperity, a DeFi project can't rely on short-term tricks to create value.
So here's the key takeaway. The entire goal is shifting. It's not about engineering a quick price pump anymore. It's about building a real, sustainable digital economy that provides genuine value to its citizens. And that's you, the token holders. And to do that, you need some solid national policies.
All right, so the first new policy is all about the treasury. It's about completely rethinking how a project manages its revenue, kind of like its national budget.
The old way was, let's be honest, pretty simplistic. Just take all the money the protocol makes and use it to buy back your own token, hoping that pushes the price up. The new way is so much smarter. It's about acting like a real successful business. It means understanding that reinvesting in growth is almost always a better use of capital than just trying to artificially prop up a price.
And what's so interesting here is how much this looks like the real world. I mean, think about a company like Apple. Do they spend every dollar of profit buying back their own stock? Of course not. They pour most of it back into R&D, into new products, into expanding their ecosystem. That's what creates real value. DeFi projects are finally catching on to that same playbook.
And look, this isn't just theory. We're seeing this play out in real time. While a project like Hyperliquid has had some success with their buyback model, you have a huge player like Jupiter openly reconsidering their whole strategy because, well, it just wasn't having the positive effect they'd hoped for. The debate is very much alive.
Okay, on to the second major policy change. This one tackles that other massive problem we talked about, that constant dreaded sell pressure that comes from the project's own team.
This right here is the classic old school model. Team tokens are locked up, but then they unlock in a fixed schedule. You could practically set your watch to it. And everyone in the market knows it's coming, creating these predictable waves of selling that can absolutely crush your token's price, no matter how good the project actually is.
But the new way, it completely flips the script. It says, hey, we as the team only get our tokens when we actually deliver results. This is huge because it perfectly aligns everyone's incentives. The team only wins when the project succeeds, which means the token holders, the citizens of our DeFi nation, also win.
And a project called Paradex is really leading the charge on this one. They proposed a model where unlocks are tied directly to real performance metrics. It's a total game changer because it links rewards to value creation, not just to the calendar.
All right, and that brings us to our third and final policy. If you're going to build a nation, you can't just rely on one single source of income. You need a diverse and healthy economy.
So in the past, pretty much the only value a token holder got was a tiny slice of the transaction fees from the main protocol. The new approach is way broader. It recognizes that a project might have lots of different business activities and that token holders should get to share in the success of all of them. And we're even seeing this from the OGs, the established leaders like Aave Labs. They've already announced that they're going to start sharing revenue from their other business activities, not just the fees from the core lending protocol. This makes holding the token so much more compelling and way more resilient.
So when you put all these major policy shifts together, what does it all really mean for the future of DeFi?
Well, it means we are right in the thick of this massive transformation. The current era is shaping up to be this really critical time of bold experimentation. The old broken models are being thrown out and teams are getting super creative, trying to design new economic models that are actually built to last.
So to wrap it all up, the new blueprint for a sustainable DeFi nation really boils down to these three key shifts. First, manage your treasury like a smart business. Second, pay your team based on performance, not time. And third, diversify your nation's income so that all your citizens benefit.
Look, this is a huge, huge step in the right direction. As that initial wave of hype finally starts to settle down, the really hard work of building real, sustainable digital economies is getting underway. The big question that's left is, are these new policies going to be enough to finally create lasting value in DeFi? Thanks for tuning in.